We're going to look at the charts. I'm going to explain it all. Let's get right into it. All right. We're going to start with Bitcoin here. And this is a classic bullish pattern of consolidation. Now, granted, this is a micro bullish pattern within a bigger macro bear. So just keep in mind that, again, it's not something that I'm saying here is going back to the all-time highs, but certainly in the near term, you have this move up. Then you have all this sideways chop of digestion of this reversal candle. We have not taken out the lows. That's what keeps this pattern in check. And ultimately, the pattern should yield a move to the upside up to 80 to 85,000. All right. So this is really an important one here, folks. In fact, I'm more bullish today on Bitcoin than I was even a few days ago because the pattern is maturing. Now, in terms of the target range, this is your target range, right? And it's pretty simple to understand the target range here, folks. Target range is basically the zone where there's going to be a lot of overhead resistance. And you can see it here. We have this low here. We have this area right in here, all through right there, and even going all the way over there. And that's going to create a lot of headwinds should Bitcoin make a move. But on a positive side, as a swing trader, from current levels, that gives us anywhere between 19% upside to as much as 26% upside in Bitcoin. And if you're like me and you're a shorter term investor or trader, this is exactly what we're looking for. And what's even better about this chart setup, right? And listen, a good technician looks at both sides. We look at, okay, if this pattern plays out, how much can I make? A good trader also looks and says, okay, well, where does this pattern fail? Because every pattern can fail. There's nothing that's infallible. There's nothing that is 100%. And so when we look at this chart, where do we know if this fails? Well, basically, if it comes down and takes out this low right here, right? So again, if we just do a little circle around it, you're looking at essentially 60,000 here. And what's nice about that is when you do a risk reward assessment, you say, okay, so if I pick it up here at 67,000 and change, my risk to failure is about $7,000 or about 10%. But on the upside, my upside reward is 19%, but we'll call it 20 to about 25%. Now, as a chartist and a technician and an investor, what's positive about that is that I have a 2-to-1 reward to risk, right? So my risk is 1, my reward is 2x that. And that's generally what you want to look for when you're analyzing a chart. So number one, we get the chart setup, which is the bullish consolidation to be favoring the upside. So we know right off the bat, if we look at the stats, the odds favor a move up in Bitcoin. But we also know if the 70% favoring percentage upside doesn't play out and the 30% causes it to fail, that my downside is only half of what my upside potential is. So not only do I have the odds in my favor, but then my risk is relatively limited in comparison. And these are things that, again, make or break investors and traders, folks. And so again, just to go over the pattern formation, big move down, reversal candle, not a reversal engulfing. Reversal engulfing would up the odds of success. But then we also have basically a downsloping zone here, consolidation, where we're trading inside of this. This is what creates the flag pattern, right? So you have your up move, and then inside of that, that's your flag. Again, that type of pattern right there. All right. And this pattern in general leads to further upside, right? So again, very clean and crisp. And again, like I said, what's great about this is we have a very defined failure level. If it breaches this low, then it's failed. That's all there is to it. Then the odds of this playing out are essentially now favoring further downside versus upside, which gets us in check. Now, if we flip over to the ETH chart, how is the ETH chart looking? The ETH chart is very, very, very similar. All right, now I have this other trend line up here. This would be a best case scenario trend line. Again, I'm going to take it away for the time being, but you can see reversal green, not fully engulfing. Engulfing would have to be a close above the whole entire red. But then we have all of this digestion or consolidation inside of that zone, right? So again, if we look at this, we say, okay, there's your consolidation. There's your flag. Here's your flagpole. Here's your inside move. This favors a move to the upside. Now, the low ask in terms of where this pattern should go would basically be 2,600, maybe if we're lucky, as high as 2,800. Notice where I'm getting that from. Very simply put, you have this low right here, this low, and this low. And so if we get this move, right between here and here is the likely target for me to take profits on my trade. All right. So again, I am in this with Smart Money Crypto members on the long side here. And again, I continue to like these two trade setups. Now, lastly, I'll quickly just dive into Solana, and we can even look at XRP. Look at that. Solana, number one, hit major technical support right here. It's a little hard to see, but if I zoom in on it, you can see it much better. High pivot, low pivot, and then it shot up, right? And then it had that bigger bull move. So now as we come all the way back here, that was our base point for where we got the reversal candle. And then same thing, inside bar consolidation. We need a break on Solana above $90. If we can close above, a daily close above 90, we should get a trigger that should yield a big push up to about $118 to $120, which again is from here. I mean, percentage wise, that's fantastic, right? I mean, we're currently at 82 and change. That would be upside of almost 40, basically 43% upside on Solana. Now, for me, just one more little note, and we'll look at XRP in just a second. But am I saying to myself, well, Solana has the best reward, 40%? The answer is no. I'm diversifying, right? So sure, I have a little Solana right now, a little bit more ETH, and a little bit more Bitcoin. Bitcoin is the most stable of all of them. It has the least amount of volatility. So I go heavier on those because, again, they're technically safer in a crypto market. And as we go down to the smaller altcoins, they can have much wider moves. And therefore, I go smaller position size. And this is all part of a great investor. What you want to do as an investor is you want to understand the risks, also the rewards, but the risks are more important because that's where you can lose money. And you need to ultimately share size, or in this space, coin size appropriately to mitigate risks. All right. And again, my crypto portfolio is just one portfolio. I have my swing trade portfolio for stocks. I have my commodities portfolio, and then I have long-term holdings portfolio. So it's a little bit of a lot of different things. And the idea is that for me is how I actually built real wealth, right? Early on in my career, I would be always trying to say, oh, well, I'm going to put it all in, one coin or one stock or whatever it is. And sometimes that would work out and I'd make a lot of money. And then sometimes I'd blow up the account. And once you blow up the account, you got to start from scratch again. Slow and steady in this game really does win. It does, slow and steady wins the race, as they say. And also another key point is trying to hit singles and doubles. I'm not looking for the craziest altcoin crap coin where I can make 1,000x, because I know the odds of success is 1 in 100 or 1 in 1,000 of me hitting it out of the ballpark. I want consistency where my account grows, because then essentially the same thing like interest, right? It just, as you have a bigger amount, your money that you're making on that amount grows and grows and grows. And you'd be surprised at how fast real wealth is developed that way. Smart decisions on investing. It's what it's all about. All right, guys. Quickly, I did promise XRP, so let's go back to XRP. XRP is a little trickier here because, again, it broke major support. It then retraced into the scene of the crime, which is what you'd expect. It got rejected, and now it's going here. If you're a bull, you need to get through this level. Once it gets through this level, you got to break here. If you can get above $2, this upper line at $2, you got a lot of upside. But this, my friends, between here and here is a massive line in the sand that's going to be major resistance. I'm not saying it can't do it. It's just got to get through. If it gets through, then game on. But until then, I'll be a skeptic on XRP in terms of the chart.
It's getting more interesting, and it's kind of scarier by the week, I would say. Equal parts for me.
Let's start with this. I think this is a good lead from Derek. Derek Thompson wrote, I cover a lot of topics in this newsletter and my podcast: inflation, GLP-1s, politics, and loneliness. But the biggest divide in my audience and the biggest divide among the people I read and listen to and trust is on the subject of artificial intelligence. The news and the discourse spaces I see it often seems divided between outrageous extremes. This technology is billionaire hyped vaporware versus this technology is 12 months away from automating all white-collar tasks or destroying the world. I think the first argument is a bit more ridiculous. If you spend any time with the technology,
I think a lot of people want that to be true. They want it to be nothing.
But
they
it's
want
not.
It to be. Of course, it's not.
That part is is disprovable. The technology is incredible, and it keeps getting more and more incredible.
I think there's some head in the sand people that just, I know what this could potentially be, and I want it to be fake. Like, hey, the metaverse was fake. Hey, crypto didn't do what people said it was going to do. This is the next line of, I think that's where that line of thinking comes from.
Yeah, but I think it's misguided.
I do too. So how many people would you say, so those are the extremes. I would consider myself more in the middle ground
Shocker.
of, well, but how many people do you think are in the middle ground? What is the middle ground?
I don't know. I think a middle ground is calm down. A lot of the yes, there will be disruption, obviously, but this idea that a vibe coded app is going to replace some of the software titans, I think is probably a bit nuts.
Well, and obviously the replacing 50% of all entry-level white-collar jobs, that number seems high. But I mean, here's the thing. Even if let's say we took the unemployment rate because of AI from, call it 4% to 8%, that would be what, 7 or 8 million people out of a job? And I think,
are you minimizing that, or
no, I'm not. I'm saying like, what if that's not like, that might not even be extreme. That might be just like what happens. So I guess where I'm kind of landing on this is, what if AI is a mistake? What if everything these tech people are saying is true, and AI and a majority of people in the future think, why did we do this? I'm a huge fan of innovation and progress. I'm not a Luddite at all. I think a lot of people, because I think AI is probably going to help a lot of knowledge workers that know how to use it. But I think there's a lot of people are going to be left behind. Inequality is going to get way worse. And I think if you just put the public, I think more people are going to hate AI than like it going forward. What do you think about that?
Well, it depends on what time frame you're talking about. So is it possible that by 2033, people think that AI was a mistake? Perhaps. I don't think I agree with that. But by 2080 or like 100 years from now, like, I think that take would age poorly like every other take does.
Okay, yeah, and obviously some people say, no, you don't realize we're creating like God here that can cure cancer. So I think one of the big things that really set off this, Matt Schumer guy posted on Twitter, something big is happening. And it was this really long piece. And I tell you what, if you have a 20,000 word piece on AI or software right now, you should shoot your shot, because it's all these people that no one's ever heard of who work tangentially in software AI and putting it out. And this thing got like 80 million views or something.
I read 4 of these this week, I think.
Right? I know. They're very long. I think most of them are probably written by AI. I've never heard of a lot of these people. They're really well written. So again, I think a lot of it has to be written by AI. But the main point of this one, I thought, was just like, you're not scared enough what this is going to do. The stuff that used to take me weeks or months now takes me hours. And what happens when this kind of stuff hits other things? And he goes through a list of things that could be impacted: financial analysis, legal work, writing and content, software engineering, medical analysis, customer service, a lot of this stuff. He's saying like, some of these things aren't going to be safe. And AI is rapidly improving to the point where a lot of these jobs are in peril. And
I think my opinion, I'm trying to keep an open mind and not have strong opinions here, because things are happening so fast.
Yeah, it's really
probably not satisfying for the audience. Like,
strong opinions loosely held, essentially. I agree.
But a lot of these people that are writing these articles are tech workers that assume that people are like them. And so much of the population is so oblivious to what's happening. And I'm not saying that's good or bad, but I think there is a lot of extrapolating being done. Matter of fact, I think in the stock market itself, I don't know that I can remember a bigger case of recency bias than what's happened the last week or two. And maybe that's recency bias talking, but it really does seem like everybody is thinking that, well, even if Salesforce and ServiceNow, which, by the way, I did hold my nose. I bought the stocks and I'm planning on holding them until I make money or get scared and sell them in a panic. But there it takes like, well, and I feel like this got consensus so fast, even if this was a warranted re-rating lower, and even if these companies aren't going the way of the dodo, like, they could just flop around and be dead money for years.
Yeah.
I feel like that's consensus already.
It does kind of seem like that. I think that it's a shot across the bow to the moat. And I don't say like dead money, but I kind of agree that like you have to be worried about the re-rating.
100%. Well, but that just happened.
Yeah. But
that just happened.
I agree.
So you're right. This was a shot about against the moat. It's like, listen, these are 60, 70% gross margin businesses. They're growing fast, and they were trading for rich multiples that used to be deserved. Now they're no longer deserved. What's the right multiple for a company that is 15 times earnings, the right multiple for a company where who knows what the earnings are going to be in 15 years? What if it's like 7 times? And I know that sounds even more extreme, but who knows? Who knows how low it goes? I
think your other point is really good too, that tech people are extrapolating, and I'm not the only one to make this point, but maybe coding and programming is the perfect thing for AI to automate away. and most other jobs have way more functions than just automated tasks. There are a lot of jobs that do just have tasks that are required, but I think that software is probably the biggest and easiest one for AI to take over for people. That's obviously what
Yeah.
we learned here.
So the people that are hysterical should be, because their jobs are being replaced. And I'm not naive to think that like other professions, especially white collar ones, won't come under pressure. I'm sure they will. But I also think that AI it's not just a tool like anything else, right? It's not like just the internet. That's kind of ridiculous because it's so much more than that. But I hope that this is a tool that's used for good and not just to wipe us out.
So did you listen to the Anthropic CEO on the Dwarkesh podcast?
I listened to the entire thing on the flight, and I don't know, man. I just don't understand anything these guys are saying.
There's
Honestly.
a lot of stuff that I don't get either, obviously. But
I think there was
nuggets.
there was maybe like here's what I understand. When there are people that like pull clips and post the video in isolation on Twitter, I understand that better than me watching the 2-hour podcast and probably dozing off at some points. But these guys are not speaking my language. I have almost no idea what they're saying.
No, there's a lot of it that I didn't get, but the stuff that I did pull out, and I think we're probably guilty of this too. Where if you and I go off into some other niche that we don't understand very well, we hear from people being like, "You idiots! How do you not understand this?" Because it's not our area of expertise. So I think the one area I picked out when he talked about the economy, and he's talking about the fact that we could see 10 to 20% GDP growth,
Yeah, rich.
and that's one of those things where I go, "This is probably one of the smartest people alive. His IQ is through the roof." But he doesn't understand how, because 70% of the economy is consumer spending. If we're going to put all these people at a job for AI, where do you get 10 or 20% growth? Productivity can't fill that gap. People have to spend money still. So one person's lost job is another company's lost spending. So I think that's where the total disconnect is. And that number the one thing that I thought that I really pulled out of that interview is he just kept saying over and over again, people aren't ready. People aren't ready for what's coming. People aren't talking enough about this, because obviously he's seeing what we're not seeing yet. And he's saying like, people don't understand what's coming. And that was the part that was like, okay. But I think my middle ground is, I think you can still have that thought and not think that the world is going to be different in like 18 to 20, because people are saying this already, 18 to 24 months, white collar work is just like going up in flames. And I don't think that a lot of these people realize that, yeah, there's so much more that goes into people's jobs than just performing these tasks that can potentially be automated. There's way more to it than that.
As I'm like thinking through this, I think I'm starting to more and more reject this idea that it's just going to replace every job. People want to work with people, and maybe their teams will be better optimized and leaner. And yeah, sure, like of course. And as we have these conversations, and we'll continue probably for the rest of eternity, right? Because artificial intelligence is not going to slow down or get worse or go away. We're going to spend just very little time, unfortunately, thinking about all the positives that might come from this, because it's right. Like who cares about the upside? That'll take care of itself. We as human beings are much, we're programmed to worry about how this goes wrong. But think about how many amazing things are going to come as a result of this. Some of the advances in medicine.
Oh yeah, no, of course. I think the thing that gets people worried is when they asked him, the thing that I pulled out of that interview that worried me, he's talking about like biological weapons and stuff that could happen because of AI. And Dwarkesh asked him like, well, what are you going to do about it? And he's like, well, that's up to the government. He's not putting any like, the AI people aren't worried about this. Like someone else needs to worry about that. Like they're not worried about the unintended consequences of this. He asked him about, what about inequality? He said, well, we got to figure it out. And so that's the one thing that scares me about tech people, is that I don't think they have a lot of common sense. They're some of the smartest people alive. I don't think they think about unintended consequences. Yeah. That's the thing that really worries me about all this, is that they don't seem to care. They're kind of like, someone else will figure it out. That's not on us. We're building this thing.
Here's an email that we got from a listener. This guy's 31. He's a data scientist, does a lot of machine learning engineering work. Previously worked at a hyperscaler. He's at a large payment company now. All right, you're missing why companies are investing in AI. They're investing in the trajectory of task completion time horizon, and it's terrifying. So I guess last week we were like $200 billion from Amazon and CapEx spending on all this stuff. Like what? How? What are they even doing? All right, so this person breaks it down a little bit. All right, 3 years ago, AI could write a line of code for me, saving 60 seconds. Last year, I could give it a block of code, saving 600 seconds. As of February, I can give it a 4-hour piece of work, and it mostly does this. This is task completion time horizon, and it's doubling every 7 months. Big tech largely operates on sizing. Someone proposes we build the future. People like me estimate the future ARR. Engineers estimate headcount required and time to market. And leaders do their calculations about anticipated ROIC and sign off or don't. Engineering is extremely expensive. At hyperscaler that he was at, I heard one headcount for 1 year pencils at $1 million between comp, management, facilities, hiring, firing, onboarding, etc. Per feature, AI is decimating headcount and time to market. Features are starting to cost a fraction of the price. You understand compounding and financial math. This is why 12-figure investments aren't crazy. His total comp is pretty good. He can now accomplish what previously took a team of 4. I'm very well respected and people love working with me, and I'm terrified. I don't know what's going to happen over the next 12 to 24 months. I don't know if I'll have a job. Leadership would never say anything like that. They just love AI. I wonder if my career ends abruptly, whether my assets will appreciate correspondingly to allow me to retire. This is the math I run through in my head. So, yeah, this person is terrified, and rightfully so. And everybody that is feeling these sort of thoughts that we're hearing on the internet, they're seeing it before we do. But also, I think it's not to sound so naive that, oh, their jobs are at risk, ours are safe. But and also those engineering teams at these hyperscalers that are spending all this money, yeah, those jobs probably are going to be on the chopping block.
It does seem like a lot of people assume, like, man, AI is going to disrupt a lot of jobs, but I'm going to be fine. And you're right. The tech people are the first line of defense, right, to see this, and they're going, oh no, this tool is magical. I'm thinking 3 steps ahead. What does this mean for me eventually? And I totally get that.
Anthropic. All right. So would you agree that the last 2 weeks, Anthropic really took the baton, is really sucking a lot of the oxygen out of the room from OpenAI? So they raised money. I can't remember. Was it 30 on 380? Whatever. It was a lot of money. And in January 2023, they had 0 revenue. And a year later, they had $100 million in revenue. And a year after that, they had $1 billion in revenue. And today they're on a $14 billion run rate.
I thought the interesting thing Dario kept saying in the podcast was, because Dwarkesh was like, why don't you just, if these tools you're creating a world of geniuses, like, why wouldn't you spend infinity money to make this happen? Keep spending more. And he's like, listen, we can't. We really don't know if we spend too much, because the whole thing is it costs a lot. And I think that's like the transistor here, is that the costs are so astronomically high to run this stuff and to build these data centers. That seems to be like the thing pushing back a little bit.